What's up, everybody? Welcome on in. Welcome. Welcome in, everyone. Hugo, Alex, what's up? Market finally bouncing back. It's beautiful. Yeah, I know. I mean, it's the weekend, so normally we see stuff kind of low, but then also obviously with the everything going on, it dipped a lot. So glad to be here though. Abshir, what's up, dude? Welcome in. I am going to be less of just trading a bunch of memes today, and I'm going to be AK. What's up, dude? I'm going to be talking about the market, balancing portfolio, things like that. Obviously, I'll talk about some different coins and stuff as well. But overall, I want to use this stream to be able to talk about the market and kind of how to balance your portfolio. I'd made a post in my Discord about this. I think it's really, really important for people to have a plan. And so that's what we'll be talking about today, as well as mixing some other stuff in as well. AK, I might need you to edit this video so we can make a put together video once I'm done. Get scrolled. What's up, man? All day Dre, Jose, welcome guys. Good thing. Good morning. Or good afternoon, depending, or good night, depending on where you're at. Hey, thanks, man. I appreciate it. Great post, token guy. Work with Mike. Window.soul. Good morning. Yeah, it's good to see. You can see I bought multiple times on ARC as it came down here, and kept adding to my position. I haven't bought any more here, but I have set up a one-sided pool, a heavy bid ask on the 200 bin. So I'm not really expecting crazy fees, but I expect it to go up over time, and I want to be able to make that back. I set up some one-sided pools on the way down as well as some two-sided pools. And so overall, needed to set up a very wide. This is like, I think the default for the 200 bin is like 400 something percent, which is obviously a little too high. But the 100 bin is only like 90 something percent. And so I was like, I need to go in between. So I did the 200 bin and then I shortened it a little bit. I think I'm around 240, 250% on the way up, which will give me plenty of room for ARC to go up. And I won't sell most of it until it gets back into where we would actually be in profit. I think profit would be around right here. Passive income guy, what's up, dude? Shred Sticky, good morning, Nick. I moved all my funds to USDC because of a plane ride, and then we dropped. I feel lucky. Bro, that's awesome. I just posted Passive Income Guy, a little thing. I don't know if you saw it in Discord, but I basically am talking about how, like, whenever I'm going offline for long periods of time, I'm going to be stabling a lot of my stuff as well. Not all of it. I'm still going to keep, like, I have, a bunch of Solana staking and DeFi Tuna. So, like, I'll keep this going. Being able to earn, it's 14% now, but it averages between like 15 and 20%. And so whenever I'm like, I'll just leave this because I'm wanting to hold Sol for the long haul, but I'll be setting up some like Sol USDC pools and stuff. And really, I'm going to be trying not to hold more than one, even, and sometimes not any meme coins or AI coins or anything like that overnight. I've been holding Grift, Buzz, and ARC for a while now. I rode them all the way down, and I'm going to be riding them back up. But honestly, it's not worth it, like, to try to gain the extra fees. I kind of put into Discord and talked about this. Let me actually pull it up. Let's see. Under educational, pull this up over here. So look, you can see here, this is the guide that I talked about, right? So my guide to having a plan, being successful in crypto. And so I'm going to talk about this a little bit better. Yeah, it's basically liquid staking with a better percent. Yeah, exactly. Good morning. I am Rizuri. Good morning all around. All right, cool. So I love to see how active our Discord is. I just posted this like 10 or 15 minutes ago or 30 minutes ago. Yeah. Love seeing that, man. So this is my guide. I want to talk a little bit about this. Yeah, the Discord link, I can share it. It's discord.gg/token guy. I'll put it in both the YouTube chat and in the Twitter one. You could also just go to my Twitter bio and it's there as well. So good morning, Trash Token Sniper. So my guide to having a plan and being successful in crypto. You need to have a plan. If you're just like, I'm in crypto and I want to make money, I want to invest some money, whatever that is, and you're like, all right, I'm here, and you just kind of get in some Discord, you get on Twitter, and you just kind of go day to day, but you don't actually have a plan. You're going to end up probably not being super successful. You might get lucky. You might be pretty good at it, and maybe you do make some money, but either way, it's going to be hard for that to be sustainable without a plan. And so you can see here, having a plan is for you should be a long-term vision, having midterm goals, and having short-term executions. And I kind of thought about this. This is just the wording that I used. I feel like it's pretty good, but obviously you can use whatever you want. But essentially, the example of this is, my vision is that I want to be financially free in 3 to 5 years. I want to have enough money to be able to get out of the everyday grind. And so for you, this could be, depending on where you live and your budget and everything, this could be $100,000. This could be $10 million, right? Like, I don't know what this looks like for you. Your vision is going to be different of what you want, what you want to get out of life, what you want to be able to provide, the kind of success you want for yourself, for your family, whatever that looks like, right? You need to have a vision. You need to have a why. Like, why am I doing this? And what is my end goal? Like, what is my vision? What do I see forward, right? Because if you're not thinking about that and you just get stuck in the short term, that's where a lot of emotional trading, a lot of emotional things can happen, where you're like, I'm making my decisions on what's happening right now. And you're constantly being shifted with the market that changes every single day or week or month. You know what I mean? And so you need to have a vision so that you're not shifted by the short-term stuff. Once you have that vision, you then need to set up some goals, which is what I call the midterm. These goals are things that may shift and change every few months, right? Or even maybe shorter, but every few months or maybe every year, depending on what your vision, how close you are to your vision, or based on kind of what's going on, you say, okay, I may need to adjust my goals a little bit, but ultimately they should be roughly the same. And so, for instance, my goals in the next 3 months to 1 year is looking at the current market, right? So we're currently in a bull market. I think we're going to stay in a bull market, even though we'll have ups and downs this year. I think overall we'll still be in a pretty strong market all the way through the end of 2025. And so for me, I'm like, all right, my goal is kind of a big goal, is that I'm going to be spending more time. I'm going to be grinding it out. My wife knows, like, hey, like, I'm trying to make us successful for a lifetime. And so like this year, and really I've been doing this for the last 3 years, like I'm on crypto every single day. Like I'm still very, I have like visions and goals for my personal life as well. And so like, I'm very involved in my kids' lives, like my family. I'm involved in church and stuff like that, and I'm a youth pastor as well. And so like, I have like those type of personal goals, and they need to meld together. Your personal goals and your goals, your financial goals, your crypto goals and stuff, they need to meld together, right? And so for me though, this time I'm really like, hey, like my wife knows, like, hey babe, if I need to go, like I need to get on the computer, I'm going to be there. She knows that normally after we get the kids to bed, we would normally like watch a show, hang out, eat some popcorn and stuff like that. And we still do that, like maybe on the weekends and stuff. But during the week, it's like, hey, I'm locked in. And so late at night, after I put the kids down, I'm hopping on, I'm checking the market. That's what happened with the Trump token. I got on after putting my kids down, and I caught it where it did, and we did pretty good on that, right? And so the key is to have some goals, kind of thinking about why you're doing this. What are my goals going to be? And so for me to reach my vision, what are my tangible goals? I need to average 20% ROI per month to be able to be financially free in 3 to 5 years based on where I'm at. And so now I'm aiming for higher than that, but I want to at least hit 20% ROI per month. And that's where your goals can shift, right? Because let's say I want to earn 20% ROI per month, which is insane numbers. Like, let's just say that, like in traditional finance, like that's wild. 20% a year is really good, right? But if my goal is to make 20% ROI per month, but then in 3 to 6 months from now, I've only averaged 10% per month, well, then I need to adjust my goals and figure out, okay, how do I need to adjust what I'm doing to match my vision and what I want? Do I need to, get a side job? Do I need to try to pick up something else that I do in crypto? Do I need to adjust my day-to-day strategy? What does that look like so that I can reach my vision, my ultimate vision? Or maybe I've been averaging 30% ROI per month after 6 months to a year. And I'm like, hey, I actually need to be safer with my investments now. I'm way overshooting what I expected. And now I'm in a really good position where I don't need to be as risky as I've been. I don't need to do that because I'm earning way more. So your goals are going to be different than what mine are. And I'm just giving you an example of what this looks like, right? So you need to adjust your goals every 3 months to a year to match your vision based on where you are. You then have the day-to-day. This is where you execute. So I want to execute on my strategy each day. This is where you're in the grind, in the trenches, whatever you want to call it. And so if I want to get 20% ROI per month, that means I would have to get at least 1% per day, realistically 2 to 3% per day. And what I mean by that is obviously, if you do the math, 1% per day would be 30% a month, 2 to 3% per day would be way more, right? But what I'm talking about is if I can earn 2 to 3% per day, it will help offset any losses, right? Because I'm not going to get it. I'm not going to get 2 to 3% every day for 365 days in a year. I'm just not. It's not going to happen. And I don't know what the market's going to do. The market's going to go up and down, right? So like maybe I'm averaging 20% ROI per month based on my midterm goals, but then the price of Solana goes up 30, 40%. Well, if I have a huge chunk of my portfolio, which we'll talk about in a little bit, in Solana, well, now my ROI is shot through the roof. I might want to take some of that out depending on how much it's gone out. I might want to stable a little bit of it. I might now be a little bit more careful on, putting in some of my investments because the price of something like Sol or these other meme coins going up a lot can drastically increase your ROI. And the problem is that we get so used to seeing these big numbers going up that we don't think of the long-term output of this. We're thinking in the short term and we're like, awesome, we earn 20%. But you're seeing these people that are earning 50 or 100% ROI on like a 4-hour Meteora chart. And you're like, what the heck, And so you have these unrealistic goals you're trying to meet in the short term instead of looking at, okay, what are my midterm goals and my long-term vision? If your goal is to average 20% per month and you hit 50% on a few different coins in that month, you need to be like stabling up a bunch of what you made and only working with a little bit for the rest of the month, right? Like you don't need to be trying to just say, okay, now that I hit that, let me try to hit it again. And let me try to hit it again. Because what you end up doing is you end up putting yourself in a position where you think that you hit it so good that you can then do it again and do it again. And the problem is you'll end up actually losing a lot of the profits that you've made. I've experienced this. I've done it. I mean, just recently we did it. Sol hit 295. All of my AI tokens were like hitting all-time highs. And what did I do? I just held them because in my mind, I'm like, hey, it's okay. They've gone up. I know they're probably going to come down. Like I didn't think to myself unrealistically they were going to keep going up. I said, hey, I just said, I think I'm going to keep earning more off of these, right? But realistically, what I should have done is I should have just sold all of it. I should have stabled a bunch of it because I knew they were going to come down. Like I knew that in my mind. I can do the token analysis, but I thought, hey, I'll just keep earning off of them. They might come down some, but eventually they'll come back up, right? And I should have just sold them because I don't need to try to keep earning the 1 to 2 to 3% a day on these tokens that have hit all-time highs. I should be selling them because they just went up 50%. Well, if they went up 50% and I'm trying to get 1% a day, that covers 50 days of trading. That covers 50 days of letting them sit and me trying to earn that. And I can just sell them and I can stable it, right? And I can still have some money to work with on the side. And so we have to be careful holding on to stuff long-term, which I'll talk about in kind of my new adjusted market strategy, right? So day-to-day is to try to earn 1% per day, maybe even 2 to 3% on some days, because I know there are going to be some losses here and there to offset that. And my goal is to earn a little bit less than 1% a day on average, which would equal roughly 20% ROI a month to be able to reach my long-term vision and my midterm goals. Cool. And so the market shifts really quickly sometimes. So I'll move down to this. And so whenever I talk about the market shifting, I'm not talking about like it going from like animal coins to AI coins to political coins. Like that's like a small meta that shifts around. That's not what I'm talking about. I'm talking about the market shifting as far as the overall sentiment, the overall volume in general, like how long you should be holding tokens, what tokens are moving and which ones are not as a part of that. And so, for example, back in like November, right? Like early November, I was DLMing, everyone was DLMing and trading coins that were like 1 to 2 million market cap because so many of those coins were sending. So many of them would go from 2 to 8 mil or 2 to 15 mil, right? And so like it was felt much safer to be able to get into those. Every now and then there would be one that would like dump off and you'd lose some money, but like 8 out of 10 of them that hit like 2 mil would also then go to like 6 or 8 mil. And so it felt really easy. It's easy to feel like, oh, I'm really good. And it's okay. Like obviously like we'll all become better as we do this and you'll learn better. And so like, yeah, you will become good at some point. But what I'm saying is we overestimate our abilities. And again, not in a negative way. We just do because we've earned so much and because we work to earn that much. It feels like, wow, like we've done really well, but we don't take into consideration how much the market played into that. And so I went from being excited about touching coins that were 2 million market cap to being like, well, after December came, I was like, man, maybe like 5 mil, 10 mil market cap. And now I'm at the point where I'm literally like not touching anything that's below 30 million market cap, except for, which I'll explain just a little bit, a small part of my portfolio, which I'll explain in a bit. And so like the market shifts in that way, right? Again, not necessarily the meta of which coins are moving right now, but in like how much money you can put into certain coins, like the sizing and things like that has to shift because those small coins, there's only so many that make it. And so for me, I'm like, hey, I'd much rather buy something that's 35 mil that'll go up to 70 mil than something that's 4 mil that'll go to 8, right? Like I'd much rather, those are both the same percentage as far as how much they move, but I'd much rather try to stick to stuff that's a little bit higher market cap, that's less likely to go crazy down or to rug or anything like that. And so I'm trying to, just be better, watch the market, see how it's shifting. And so that's where I think the market is right now. For me, I don't want to touch anything too low because there's just too many scams, too many rugs, too many, even if they're not scams or rugs, it's just there's a lot of coins that don't make it. They'll pump up a little bit, but then they'll dump right down even quicker. So my new market adjusted strategy, okay, so this is it. So right now, let me minimize this. Right now, I'm holding ARK, Grift, and Buzz, right? Outside of that, I have Solana. And so that's pretty much it, right? But I want to get to a place where I am maybe only holding one of these for longer than 4 to 6 hours or not even at all, right? And what I mean by that is that I might trade them on the day, depending on what's going on. And then I'll make my money off of them for that day. And that may be 2 hours, it may be 4, 8 hours, or even up to 10 or 12 hours max, which would basically be me having them in the morning and then watching them throughout the day. And then when I go to bed, I close them out. But I'm wanting to not stick in these long term because what ends up happening is that they're very volatile and we can earn really good fees over time. But the hard part is that whenever unexpected things in the market happen, like what happened with Solana over the last few days, I drastically lose a lot of my portfolio because I'm holding these. And so I would rather be able to control my overall TVL as much as possible, my overall value as much as possible. And I do that by just not sitting in these long term and not having these pools open when I can't watch them. I want to be able to watch them so that if something drastic starts to happen, I can get out of them when needed and really reduce my losses as best as possible. And I know that everybody wants to have the most passive income, right? Like a lot of the questions I get is like, hey, I want to get into Sol USDC or I want to get into this. I don't want to earn 1% a day without ever looking at it. And I get it. Like I would love to do that as well. But it's really, really important to understand like the high earnings come from you being active. Like if everybody could just passively sit on it and not be active, then the earnings wouldn't be the same, right? And so there are ways to mix your portfolio up, which we'll talk about in a minute, to be able to have some passive and some active stuff. But ultimately, if you're looking for a super passive play, you're just not going to earn 20% a month. You're going to earn, much, much less than that, right? You'll probably end up earning 1.5 or 2% a month, which again, based on traditional finance, is still really, really good. Like on DeFi Tuna here, me earning 14. Again, this average is closer to 15 to 20% on traditional finance is ridiculously good. And the fact that Solana could go way up, again, is really, really good. And again, I think we get stuck on like the passive earnings, right? The fees we generate, the APY. But like, look, I've had this sitting in here for, I don't know, maybe a week, and I've earned $150, which that's free money, $150, right? But Solana went all the way up to 295, and it's at 235 right now. So let's say Solana made its way from where it is now at 235 all the way up to 275, okay? That's a 1.17 or 17% increase. And so if I have $59,000 in this right now, and I multiply that 1.17 times the 59, I'm now at 69,000. So I just made $10,000 from the price of Solana going up. Whereas this APY is 14%, and I earned $150 in a week, right? And so if I earn 14% on the year, guess how much I'm going to earn off of 59,000? 8,260. And so in 1 or 2 days, the price of Solana could go up enough that I would earn more in that 1 or 2 days than I would a whole year of letting this sit. And so does that mean that I just, pull this out? Well, no, I mean, I believe in Solana long-term, but what I'm trying to say is that when your portfolio value goes up drastically in crypto, you don't need to just leave it there and let it sit on that. And so maybe you temporarily pull it out. Once Solana makes a really big pump, maybe you pull it out and you move it into USDC, because guess what? You can earn 11.75% on USDC right here. Now it's almost capped, so you may not be able to get it in, but there's other places where you can earn anywhere between as low as 8 and as high as like 15% on USDC right now, right? Lulo is a platform you can put it in and it'll move it for you depending on where the highest APY is. And so like, if you want, if Sol goes up a bunch, just stable it, right? Take your profits on that, move it into USDC. And then guess what? If Sol goes back up and you decide to move your money back into it, you haven't lost any money. And if Sol goes down, then you can use your USDC to buy back into Sol to then, be in a good spot for it to come back up later. And so don't feel like you need to constantly be earning APY when it doesn't make sense because your TVL has gone up so much. And this is a lesson that I've learned, unfortunately, pretty hard recently because of Sol going up to 295, me having a lot of money and a lot of things, watching my portfolio drastically go up. And now we're back down to 235 and I've watched it drastically come down. And now I did some mitigation on that, but you just have to be careful and you need to make smart decisions. So after the market bounces back, this isn't like today I'm going to be adjusting my whole portfolio immediately because of everything that's happened, but I'm going to be slowly shifting this portfolio as stuff starts to bounce back into this strategy I'm talking about now. And so let's move into this, right? So I talked about this. I'm not holding anything overnight. I'm trying not to sit anything very long. I'll stable up my profits. I'll put them into DeFi Tuna or into another platform that's really, really good. And then I plan on kind of shifting my portfolio into this next part here, right? And so I am bullish on Solana long-term. My end goal for Solana, I imagine that it'll be closer to 500 than to 200 by the end of the year. That's what I think it'll be. I could be completely wrong, but my vision and what I'm building is towards that, right? And so if that's the case, a lot of my APY, a lot of my earnings and stuff need to go into Solana to be able to have a long-term growth plan, as well as, again, that short-term, midterm goals and short-term execution to be able to build on that long-term plan, right? And so for me, I'm trying to collect Solana long-term. I'm also going to be in JLP because JLP has Bitcoin, Ethereum, Solana in it that back JLP, but also it has USDC and USDT, which helps stabilize it. So JLP won't go up as much when the market goes up, but it will also not go down as much when the market goes down. And JLP, obviously Jupiter, is going to stay very hot, and they'll be rolling more of their profits into JLP like they've been doing, which will steadily grow over time. And you can see the JLP, I don't know what it's currently at. Let's see. But it sits between like 25 and right now it's at 63%. So it's really high right now, but on the low end, it's like 25. It probably averages like 30 to 35% APY, which doesn't include the fact that Sol, ETH, and Bitcoin will go up over time. And so this is a really, really good, JLP is a really good long-term play as well. So I'll have both my money in JLP, which you can also provide here. So look, JLP is earning 6.83%. It's maxed out, so you can't add any more. But there's other places you can earn on JLP as well, between 5 and 10%, right? So you can earn the 63% here. You can benefit from the price of Sol going up, and you can lend it somewhere to where you're earning another 5 to 8%. And so really, JLP is really, really great, right? And so I'll have some in Solana. I'll have some in JLP. And this is going to be roughly 50% of my portfolio, which you can see here. So I plan to collect Solana long-term. Part of that will be JLP to help stabilize the dips. And then a bunch of it will be Solana as well, right? And so this is going to be 50% of my portfolio. A huge chunk is just going to be, hey, like pretty stable earnings that we're trying to earn long-term and building a portfolio that will grow over time, right? The next thing that I'm going to do is kind of go down the next level. And so 30% of my portfolio is going to be in two types of pools. And so these will be pools that will earn me Meteora points on Meteora, earn me Met points on Meteora, which will help for the airdrop coming. And also on DeFi Tuna as well, because I can increase my earnings by using leverage there. And so I'm going to have some very safe wide pools on these. But the goal here is to try to get close to 0.5% to 1% a day. If I can get more, great. But this is going to help with my kind of midterm earnings that I'm looking for. And so those will be Sol USDC and JLP Sol. And so Sol USDC will earn a little bit more than JLP Sol will. But I want to use both of these. And again, I talked about having JLP. I talked about having Sol. And now I'm basically going to have that again. But I'm going to be using a pairing of tokens, JLP Sol and Sol USDC here, to be able to make higher earnings through the trades that happen here, right? And so this will be 30% of my portfolio. So 80% of my portfolio is not even in meme coins. It's going to be in Solana, USDC, JLP, either staked or pooled, right? And so again, like these are insane earnings, right? The things that I can earn off of all this is so good compared to traditional finance. There's no need for me to put a big chunk of my portfolio chasing after things, right? Then I'm going to use 15% of my portfolio on active and trending meme coins. And when I say meme coins, that could be AI coins. Like I say meme just because that's the general term, but all of these are AI coins here. I consider these a meme coin, even though they're not. Like I think these are way better than a traditional meme coin. But these are what I mean by that. And so this could be ARK and Grift and Buzz and Moby and a bunch of these other ones that are doing really, really well. It could also be some other meme coins, things like Trump or other tokens, right? And so these are the different things that it could be. And so these are meme coins. These are going to be fairly volatile. And so my criteria around the meme coins that I'm trading, I need to be pretty strict as well. And so again, like I said, anything above 30 million market cap is what I'm looking at. The token has to be at least a day old, if not older. I need volume to be at least 2 million an hour. And I need to make sure that there's a verified team that has a plan and actual product, things like that, right? This isn't just, unless it's obviously just like an animal meme coin, like, you know, they could be going off of it being a meme and not necessarily something else. But overall, I have a much more strict criteria on the meme coins I'll be trading. And this is really going to be my day-to-day. Like I'll be moving around some like Sol USDC and JLP Sol and adjusting my pools and stuff daily as well. But a lot of my active trading will be this 15% of my portfolio. And so this is going to be me getting in and out of stuff. I could be setting up one-sided pools, catching stuff on the way down and back up. I'm going to be in stuff for maybe only 10 or 15 minutes or maybe 30 minutes or an hour. But this is stuff I'm getting in and out of. I'm going to be stabling up my profit into JLP or USDC and adding it to, again, my long-term plan. And then I'll come back to that 15% of my portfolio on memes and keep trading that. So any of my profits I'm making, I'm rotating into the stable stuff. So that way my profits are actually profits, because if you profit, but then you roll it back into the same thing you just earned on, and then it goes back down, well, now you've lost all your profits, right? And so I want to go take my short-term day-to-day execution, roll that into my midterm goals, which then will roll into my long-term plan, and will allow me to then reach my vision, which is to be financially independent, free, out of the grind in 3 to 5 years. If I can do it sooner than that, amazing, but I'm trying to have a realistic plan for myself here. Then I'm going to have 4% of my portfolio on Soul Decoder, which is a bot that farms for you. And so part of this will be to farm fees to get the Meteor airdrop. And part of this as well will be able to take some of my portfolio that can kind of be a little more passive in earning. And so I'll be setting up my bot to do that and earning on the side. And I'll move it between wallets to be able to earn on those as well. And then the very last thing is I will use 1% of my portfolio on trading degen memes. And the reason why I'm doing this is not because I think there's a ton of money to be made in this. The reason I'm doing this is because, if I'm being really honest, this whole top part here can get boring. And making money is not always just like super fun in the moment. It always feels good when you can see the numbers go up over time. But sometimes it's easy to get stuck in this idea that you need to constantly be on, you need to constantly be trading things. And a lot of times you end up losing money because of that. And so my brain, the way it works, the way that I do things, I need to be like, I enjoy, like, it's fun to trade meme coins, especially the degen ones, and see the numbers kind of go crazy. And so this 1% won't affect my overall portfolio drastically. Maybe I'll hit some stuff and do really well. I might lose a lot of it. But the goal here is that this will keep me very active, watching the market, seeing what's happening on the stuff that's below 30 million market cap. So I'll still have my finger on the pulse, if you will. And it'll give me something fun to do in the meantime. I really enjoy the Vector app. I think it's really well done. I love Vector. Somebody in the chat asked earlier, like, what Vector app is. It's a SocialFi, TradeFi app, meaning that you can make trades and broadcast them to people that follow you, and they can follow on your trades. And if they make money on it, then you make money on it. Also, vice versa, you can watch other people's trades and you can see kind of what's trending and what people are trading on, how much they're trading on, and you can follow those trades. And so there's a lot of things that you can do on it that I really enjoy. I think the Tensor team did a really good job. And so that's where my 1% will be. It'll been trading the memes on Vector, kind of in between all of my other adjustments whenever I'd maybe be bored or whatever you want to call it, right? So I think it's fun. It's good to have a little fun. It's good to enjoy some of that. And it'll allow me to kind of catch things that are early, if that makes sense, right? And so if I'm trading some of these, well, then I'll catch the ones as the few that get through the degen and start to become something really good at the 30 million market cap or more. And obviously, like, if another coin like Trump drops, right, where it's like, this is mega massive, like I'm talking about, again, like what happened with Trump, where it's like, okay, this thing could like 5 or 10x really easily because of who it is. It's possible that I'll take out some of my midterm holdings here, not the long term, but some of the midterm stuff to rotate into what I'd consider my meme coins. So let's say I do 15% here. And even the Soul Decoder bot, maybe I have 4% here, 15% here, and then I might take out another 5 or 10 to where, like, at max 20 to 30%, maybe I would go put it in something like Trump and DLMM it, because I think it's going to do really well. And it's like pretty convincing that, like, okay, this thing is like launching, right? But again, this is maybe a once a month or once every 2 month scenario that would happen. So you definitely don't want to jump on that. I want to stick to this like pretty strict, right? And you can see I put kind of the summary down here: 50%, 30%, 15, 4, and 1, right? And I kind of have what those are. You can join my Discord to check this out. I'll also be turning this into a video. So this is a live stream right now, but I'll be breaking this all down into a video that's going to be a shorter content. I'll post it on YouTube and on Twitter for people, because I think people that can't watch this I want them to be able to, they can come watch the stream, obviously, but I want people who are not, who want to see this maybe in a shorter amount of time to be able to get this out to more people, right? To be able to help more people. So I will have this set up. And so that's the gist of it, right? You need to have a plan. You need to make sure that you have a long-term vision. You have your why of what you're doing and what your goals are on the midterm, how you're going to get to that vision. And then you need to have your day-to-day. What are you executing on your strategy each and every single day to reach those midterm goals that may shift every now and then, but ultimately those goals will then get you to your long-term vision. And so you need to have a plan. Don't go wandering around in the dark hoping that you'll find a pot of gold. Don't do that. Make sure that you have a plan and try to stick to it. And if you can do this, again, it may be a little boring in the short term, but in the long term, you'll see much more success having a plan like this. And you'll need to adjust yours to whatever you are doing. But you'll find much more success in this than maybe what you have been doing, which maybe, again, is just kind of wandering around, like trying to hit certain coins, trying to follow certain people, or, whatever that looks like. But being stuck in the short term and not having a mid or long-term goal, if that makes sense. All right, let me check out some of the chat. What do you think about Vine? I don't know. It kind of depends on what the future of Vine is with X and stuff like that. I think it could do well, but I'm not super sure. I did enter it at one point, made some money on it. I then held on to it too long and lost some money on it. Overall, I was in profit, but I haven't gotten back in it since then. Ryan, excellent live today. Just joined the Discord. Hey, thanks, man. Why don't you allocate a small percent of your portfolio for the riskier plays? I do. You can see that here. Is the bot profitable or is it just for points? It has been profitable for me. It's just not as profitable. So like, it's mostly for points, but at the same time, I do expect, based on my settings, for my overall portfolio to go up over time. I just don't expect it to like be drastic. But I could expect the bot to maybe earn 10 to 15% a month, maybe only 5%. But either way, that's why I'm putting 4% of my portfolio in it. How many wallets? I recommend you use one wallet or two max. You don't want to be bouncing around between wallets. I use two wallets because I have a portfolio wallet, which is tied to the Mateys NFTs. And then I have my personal portfolio as well. And I have that wallet. I also have that personal portfolio also has mixed in some of, I call it my friends and family one because I have it mixed in with mine, some of my close family members as well. Can I start to DLMM USDC Sol with only Sol and finishing having only USDC if Sol goes down? No. So if you set up a Sol USDC pool and you set up just Solana, then what will end up happening is as the price of Solana goes up, you'll be selling your Solana. And so you'll have USDC left and you'll have no Solana left, but the value of your TVL will be higher. I'm just learning about DLMM, still a little confused on how to use it. Just wondering what's the minimum money needed on Meteor to try to add to a pool. So if you haven't already, let me get off of this here, minimize this. I have a guide. You can come join our Discord, is there as well, but you can see on Twitter, on X, pinned to the top of my profile, Ultimate DLMM Guide for Meteora. It goes through the DLMM basics, how to select a pool and some key information about that, advanced strategy breakdown, so going through like some of the different strategies, and then charting entries and exits, how I decide when to get in and out of coins. And I have videos. They're all fairly short, 5 minutes, 6 minutes, 8, almost 9 minutes, 9 minutes there. And so you can go through. I took a lot of time to break this down. You can go watch that. This guide will be super helpful to give you a lot of the basic information you need on how to set up a pool. Like the Meteora strategy, time and pools, would that limited time apply to DeFi Tuna? It seems like you need a bit more time to earn. I'm not exactly sure your question, but I can try to answer it if you're just asking the difference between Meteora and DeFi Tuna. DeFi Tuna, if you end up trading on here, you're using leverage, meaning you're borrowing money from people, right? Which normally with leverage, it's pretty straightforward. But because you're putting it into a pool, it's a little different on DeFi Tuna. And so what ends up happening what ends up happening is you need to stay in the pool longer, because as it goes to the edges, normally with a regular, like let's say Sol USDC pool on Meteor, if you enter here and it very quickly goes from the middle to like the price of Solana goes up, so it goes way up here very quickly, you'll end up with more money than you started with, because the value of Sol's gone up and you sold it on the way up. Now you still have impermanent loss technically, because if you just would have held Sol and it would have gone up to this price, then you would have made more money than having it slowly sell on the way up. So there's technically impermanent loss, but the value of your portfolio will be higher as it goes up. And you will have earned a little bit of fees, but if it moves too quickly, you won't earn a lot of fees. But that's okay, because you would still be up in money, right? But on DeFi Tuna, if it quickly goes from here to here, you'll actually lose money. And the reason why is because if you're, let's say you're leveraged at a 3x, well, and you put in $1,000, well, you have $1,000 in here and you've taken out $3,000 for a total of, or I guess would you have 3,000 or whatever it is? Let's say you have $4,000 total after doing a 3x. And so 1,000 of your dollars and 3,000 of somebody else's. Well, as it goes up, your $1,000 goes up in value, which is good. But the person you're lending from or borrowing from, they lent to you when Sol was 230. And so if they lent you 5 Solana, again, I know this doesn't math, but just as an example, if they lent you 5 Solana, well, it was 230 here. If it's now worth 240, you still owe them 5 Solana, but Solana is now worth $10 more per. And so you end up having to, if you close out the pool, you're paying back the people who you borrowed from, but you're paying them back at a higher value than you entered. And so you end up losing the money on the lended amount. And because you're lending more than what you have in here, even though the value of your $1,000 went up, that 3,000 went up even more, and you have to pay it back at the same value of what you got it at. So with DeFi Tuna, you don't want it to go to the ends of your ranges. It's okay if it goes there temporarily and comes back to the middle, but really you want to close out the pool if you're on a 50-50 at your entry point. That's like ideal, right? Or you can like long Sol, which means you would set it up like this, in which you would want to close it out just higher than your entry point. Or if you short it a little bit like this, then just lower than your entry point, right? So you need to find a place in which, you know, kind of depending on what you're doing, right? If you do a 50-50, slightly long, slightly short on it, that you want to sit in it as long as possible and then close it out as close to your entry point as possible. Now, that might mean you have to go really wide on your Sol USDC pool. I mean, look, if I do a 4x on Sol USDC and I go 19% down and I go 23% up, this says I'm still earning 1.75% a day. This is a massive range for Sol USDC, and you're still earning 1.68%, right? And so again, the longer you sit in it, the better. So as long as Sol doesn't just absolutely crash or absolutely pump to the moon during this time, the longer you sit in it, if it does end up going to the edge, the amount of money you've made on the yield is going to offset the fact that once it gets to the edge, you owe somebody more than when you started, right? So it's important to be careful when using DeFi Tuna because of how leverage works. But the amount of yield that you earn can be ridiculously high. So you just have to be careful and watch it. Also, you pay a fee, not on how much yield you've earned, but you pay it when you deposit your pool. And so you're paying a percentage. It's like 0.05% is how much you're going to pay. That's how much the fee is, which compared to other platforms is really, really low. But you're paying it on the front end. So you don't want to be opening, closing, because you'll end up losing money that way. You want to try to sit in it at least for a little while. Ideally, 4 to 6 hours. But if you can sit in it longer, that's obviously good for how much yield you would have, right? And so that's kind of DeFi Tuna. If you use 15% on active trading and you get some bad days, will you continue to trade with that 12 or 13% until you recover the 15%, or you add more? Yeah, so I won't add more into my reserves. If my 15% goes down and it's now 12%, like, I mean, technically, yeah, it'd be 12%. I just leave it there. Like, I'm not adding more to it. I need to get that 12 to 13% back up to 15% and ideally grow it even more, right? And so, but if it goes above that 15% goes higher, I will roll those profits into my midterm goals, and those midterm goals of having the Sol USDC and JLP Sol pools will roll into my long-term goals, where when I earn Solana off of those, I'll roll those into the lower yielding gains. And so you can kind of imagine it as like a trickle up system. And so like my really smaller portfolio, as I earn fees, I want it to stay roughly the same. And then as I earn off of those, which I should have pretty good earnings, it'll roll into the top, the middle one, which will then roll into the top, if that makes sense. So think of it as a snowball effect, but in kind of a tiered system. Sniper Suze, I really appreciate this token, guy. I made 400K in November, and I've been giving it all back to the trenches. This stream is making me rethink everything, but I need help learning more. Hey, dude, I'm glad you've been active in the Discord. Keep being there and showing up. You know, like I said, like we want to try to, my goal is to try to help people to be able to be as successful as possible, to become financially free, to reach their vision, their goals. And so that's what we're here and we're trying to do, man. How safe is DeFi Tuna? Are the developers public? Pseudo Geek, great questions. You can go check out their Discord, check out their Twitter. They just released an audit on all that information. I've had a lot of calls with the team. I personally feel safe putting my money in here. They're backed by Orca, which is a very like Orca's been around forever, right? So like obviously Orca liked what they saw. They decided to invest in them. Soul Big Brain also invested in them early, as well as a bunch of other people, including Secure 3. I'm trying to remember what it's called. It's an audit company that audited their thing and then was like, hey, we would love this enough, we want to invest in it. And so they invested in it also. And so there's a lot of teams that are like really solid that have invested in them. Also, the team that did this has been around a long time and created a lot of cool stuff, including the original NFT minting candy machine. And so if you were here when NFT mints were really big, the program that allowed people to mint NFTs effectively and efficiently was DeFi Tuna. They created the candy machine, the devs behind it. And so they've been here a long time, building for a long time, and really solid. So I trust them, but you need to do your own research on whether you should or shouldn't trust if you think it's secure or safe yourself. Styles, can you elaborate on your midterm strategy of pooling Sol USDC and Sol GLP, please? You mentioned wide ranges, so I assume that it will be something like 100 bin or more. Yeah, so like not that wide. 100 bin for Sol USDC would be pretty massive. On meme coins, 100 bin is like pretty good, but like if you go in here, like 100 bin, you'd have to come all the way down here, which this says that it's earning pretty good actually, which is pretty surprising. The numbers on these are pretty high today, but when I say wide, like Sol USDC, I might still do a 20 bin or a 0.2% on Meteora. But on DeFi Tuna, I'm going to go much wider. So for instance, let's say on Meteora, I'm doing this, but I'll probably end up adjusting this day to day, the Sol USDC pool. And so if I add to this, this is 7% up and 6.5% down. And it's at 230. So it'll get me all the way down to 215 and as high as 246. And so to me, this might be a little shallow, but on Meteora to earn a decent amount, I might need to do this. I might do the 50 bin as well. The 50 bin is still earning over 0.5% a day, which would get me to 15%, a little over 15% ROI a month. So that's not too bad. This could be the 50 bin could be pretty good. And this would have me range from 193 all the way up to 272. So that's a pretty good range. But on DeFi Tuna, because I'm using leverage, I'd want to go a little wider. And so I'd probably end up, again, depending on whether I think Sol's going to go up or down, I could do like 16% down and 20% up, or I could do it vice versa. I could do 20% down and 17% up. But I'd roughly be between like 16 and 20-ish, 22%. I'd want to go this wide. But you can see, like, I can earn close to 2% a day right now on Sol USDC if I use a 4x leverage, or if I do like 4.5x leverage, then I'm earning even more, right? If I do 5x, obviously I can do that as well. You just have to be careful with the liquidations, which, oh, I don't have any money in it. Okay, I was like, why is this not showing that? And so you can see if you use a 5x, the liquidation ends up being like pretty close. And so I don't like doing 5x. I'd rather be like 4.5 or even like closer to 4x. But you can see like if you do, let's say you do 4.25x, and I'm like, all right, I'm going to do 20% up and I'm going to do 20% down. Well, I'm still earning 2.5% a day on this, right? Again, I don't want it to hit the edges or too quickly go to them. So I need to be careful and watch this closely. But ultimately, you want to go fairly wide if you're doing DeFi Tuna because of the leverage you're using and not wanting to have to lose money if it ends up going too close to the ends of your range. You also want to make sure that you use limit orders, which you can just put at your bounds, meaning like at the end of your ranges here. And you can have a limit order so that way it'll close out of your pool for you, and that way it'll prevent you from becoming liquidated. So you just need to watch that. I don't understand why in Sol USDC DLMM I can't buy USDC while Sol goes down. Because if the value of it's a pair, it's a USDC to Sol pair. So if you're pairing Sol and USDC, if the price of Sol is going down, then what the USDC would have to be, you would have to be selling it. If Sol goes down, you'd have to be selling it, or sorry, you'd have to be buying more Sol as it goes down because the value is going down, because you're pairing it with USDC, and vice versa. If Sol's going up, you'd have to be selling it. I don't know why you would want to sell Sol as it goes down anyway, and buy it as it goes up in that regard. I mean, you can do that, but like I don't know why you'd want to have that inverse. I guess you could if you swapped these two, like Sol USDC. You could probably swap these. You'd have to create a USDC Sol pool instead of a Sol USDC pool. You might be able to do that. Why don't you use long-term pools, USDC Sol just in DeFi Tuna? The yield is better, and for what understand, no matter how it moves, you'll end up with more. Not necessarily, Ozzy. So like there's a little more risk to DeFi Tuna because if it ends up moving too quickly, like if it moves too quickly on Meteora, I'm not worried about it because I'll just auto adjust. I mean, I'll just manually adjust it and then set it up again. And even though my TVL might go down, like ultimately as it's moving up and down, like I'll earn fees, and impermanent loss will be my only thing that I'm risking. But with DeFi Tuna, your impermanent loss hits harder because you're lending. And so there's a little more risk to it in that regard. There's also the inherent risk of the liquidation factor, which again, we can minimize. But it's just a little more risky. So I don't want to just have it all in DeFi Tuna. I want to have it mixed between the two. Again, it's just another level of kind of less risky, more risky mixed in my portfolio, if that makes sense. TG, you said that you only stay in DeFi Tuna for a few hours. I just want to make sure I heard you right. No. I'm just saying like you want to stay in it at least a few hours, like at the very minimum. You can stay in it days. Like if I set this up on Sol USDC and it just ranges in here for days or weeks, like that's great. I would say if you think that you're watching your chart, like you're watching Sol, or yeah, I need to go here to perps. You're watching Sol USDC, and you think you either see someone else tell you this or you think it, whatever, that it's going to end up like dropping too much or drastically going up very fast, and it's going to push too close to the ends of your range on DeFi Tuna, then you probably want to close out of that pool. And so you just want to watch for that. But ultimately, if it just ranges pretty good for a while in the middle, then, you know, that's the ideal scenario. And so you would just hang on to it and earn as much as you can for as long as you can. But you don't want to get in and out of it every like 30 minutes, right? Like you shouldn't have that tight of a range. That's not the best way to do it because you'll end up paying a lot in the fees of creating the pool, if that makes sense. Dina's DeFi Tuna. Oh, sorry. Hold on. Let's see. I'm familiar with LPing on Orca. How is this type of liquidity providing different? Looks interesting. Thanks for the good content. Hey, no problem, man. So on Meteora, this is a DLMM instead of on Orca, which is a CLMM. And so dynamic liquidity market making is what it stands for. It's concentrated, just like on Orca, But the bin step pools work a little bit different. And the big thing is the fees. So right now, Sol USDC, this pool is a 50 bin 0.05%. But you can see the dynamic fee is actually 0.0535. And on tokens where the volume picks up drastically, Meteora allows the fees to dynamically go up so that you'll earn more during those times. And so there's a few other things with how the bin steps work and such, but that's essentially Meteora. And then DeFi Tuna uses Orca's pools. They eventually will use Meteora as well, but they started with Orca. It's easier to integrate. And so you're using an Orca pool just like you normally would, but you're leveraging, meaning you're borrowing money. So there's people who have lent money and they get an APY, meaning when you pay back the money, you're paying it back at a high interest, which when you set up a pool, you'll see your debt here. The thing is that even though you're paying an interest for this, your yield is so much higher on your pools that it drastically outperforms the amount of debt you would have to pay. And so you're basically using an Orca pool, but let's say I only have $2,000. I can do a 4X, and now I can use Orca pools with $8,000 instead of $2,000. And I'll basically be paying back the people, but also earning higher yield. So this is obviously really good. The downside is, again, if the price of the token moves too drastically, you'll end up losing some money. Like you'll still have a high yield, but your overall TVL, you'll end up having to pay back more. So if you stayed in the pool long enough, you may just break even. Or if you stay in it a really long time, even if it does go to the end of your range and you'll have to pay them back, you'd lose some on your TVL. The amount of yield you've earned would offset that a lot. Or if it ends up being really short term, you're paying a fee to set up the pool and you're leveraging a bunch. And so if the price drastically drops, like if I set up a pool here and Sol's 228 and it drops to 192 within 4 or 6 hours or something, which again is why I have it really wide, because that's not super likely. But if it does, then you would end up losing money in the long haul. So that's the riskier part of DeFi Tuna. But obviously, I like it enough. I think that you can mitigate those risks to be able to earn a lot because the yield is insane. Good morning. I'm sure a time like this, when the market dumped crazy last night, you close your Sol LP. You did that and swapped to USDC when watching it dump. You close your Sol LP. So I did not close my Sol USDC pool until it went out of range. So I had a Sol USDC pool set up, but it was on a 20 bin. It was a little too tight, and it went out of range around the 232 area. And so I have not reset it back up, but I just closed out of the pool. And then like I'm still holding Solana. You can see like I'm lending. It's in both my wallet and it's right here. You can see I'm still holding Sol here. Which is 57. Again, just depends on what the price of Sol is. This is going up and down. But you can see my APY now is 27%. So I don't know if people started using DeFi Tuna since we've been on here, but now you can see I'm earning 27% APY. So this number jumps between like that 14% we saw earlier, and sometimes it temporarily will go up to like 50%. But it usually averages around 15 to 20% APY, which is really good on Solana. And I'll just hold this because I believe in Solana long term. I talked about my vision and my goals. And so I'll always have this and rotate my profits from my short-term and mid-term strategies into the long-term. Sleepy, absolutely. Yeah, that's important. You want to use limit orders and you want to keep them a good distance from your liquidation levels. So I don't recommend using 5X because if you notice, if you use 5X leverage, and you're like out here at like 7 and 7%, you can see like the difference between your pool closing and liquidation is from 213 to 206. But there are instances where like Solana will wick pretty big. And so you don't want it to go into your liquidation too quickly. So, but you can see like if you do a 4X on this, well, now look how drastic that is from 5 to 4. Your liquidation zone from the end of your pool is 213 and it would liquidate at 183. It's not going to wick, $30. Sol's not going to wick like that, right? And so this is a much safer thing. And then what you do is when you set up the limit order, you would just click this thing that says set limit orders to range bounds. And so anytime it hits the end of range, it would close out your pool for you. Or if you don't want that and you're like, well, maybe I want a little bit of leeway to where if it comes out of my pool but comes back in, then you could just do like, all right, it's at 213. Maybe I'll set it up at like 212 or 210 just outside your current zone, because it's still way far away from the liquidation zone. But you want to have limit orders to be able to protect you from liquidation for sure. It's a great point. Yeah, it's like a trade and an LP position, DeFi Tuna. That's a good way to look at it. What are the risks of leaving Sol on DeFi Tuna long-term, a few months? You need to figure out those risks, like measure that for yourself. But the inherent risks of putting your money in a platform is if for some reason the platform is hacked or exposed, if the platform people themselves are not secure, and they end up doing something that would like hurt the people that have their money in it. Those are really like the only two like inherent like big risks. And so you need to verify for yourself that you trust the team and the platform. They have an audit that just came out that you can go look at. The audit checks security of their smart contracts, making sure it can't be hacked, making sure there's no backdoors, and making sure the team itself doesn't have any backdoors built into it. And so they have more audits that are coming. They'll have multiple that come out, but they did just release their first one. Also, you need to look at who the team is, their history, and who's backing them. And so Sol Big Brain initially backed them. You also have Orca directly backing them. You have other auditing companies and other financial companies backing them, which is obviously a good thing. And then the team itself has been around for like 4 years on Solana, or 3 years on Solana, and they built the original candy machine. So there's a lot of like credibility to the team, in my opinion, but you need to do that for yourself. And so if you trust the team and the platform, then the only like risk you would have of having your Sol in here is that the value of your Sol could go down, which would happen if you're holding it anyway. So I don't really consider that an issue. And the other thing is that if the utilization rate on the whatever you're supplying, so Sol, gets too high, one, the supply APY is going to go way up. And so you'll make a lot of money. But also if it's too high, you won't be able to withdraw your money because the money's being utilized. So like right now, the utilization rate is 77%, right? So that means if we subtract this from 100%, we're looking at 23%. The supply limit, or the supply right now, is 4,259,000. So only 23% of this could be can be withdrawn, right? Because the rest of it's being used, the 3.283 right here. And so for some reason, if your money's in here and the utilization rate gets too high, you can't pull your money out because people are borrowing your money. But usually that doesn't last long. It's a very good balanced system, because if people see that the APY on Sol gets crazy, like if the utilization rate gets to like 98% on Sol, the APY will literally go to like 100%. And so people who are borrowing at 100% are going to be like, hey, my debt is getting way too high. I need to close out of this pool. When they do that, the utilization then drops and the APY drops. And so when the utilization drops, that would allow people to remove their money out. So it's possible that your money could get locked because you're lending it to people if the utilization rate gets high. But again, that's usually only temporary. Do you suggest using LST Sol for deposits on DeFi Tuna or Lulo? Well, an LST is not, like Sol is not inherently an LST. LSTs are of Sol. And so you could put them on Lulo. Lulo could be pretty good, or directly on DeFi Tuna. I think wherever you're getting the best APY and you feel the most secure is great. Do that. It would be better having left USDC in case the price of Sol goes down. If I start having Sol and it goes up, it's okay. If it goes down and I have USDC on the low limit, like a stop loss. I'm not too sure what you're asking, Francis Carew. Are you talking about lending, or are you talking about whenever you set up a pool to trade? Downside with DeFi Tuna is that you can't deposit withdraw from exiting positions, so it's hard to compound. They're going to be. So one thing that's really cool is like DeFi Tuna is going to be coming out with a bunch more stuff, including compounding, as well as some really, really, really cool in-depth charting. And so right now, like if you set up a pool on Meteora, Orca, or anywhere else, like you can't see what your potential earnings are, right? But DeFi Tuna is going to have a graph that actually is going to show that. It's going to show what your potential earnings are on the curve. They have a bunch of other stuff that's going to be coming out as well. I'm keeping a Sol USDC pool in HawkFi, and then I claim the yield and stick it in there. Hey, that's awesome, Sleepy. HawkFi is another great option. They take a 8% fee on any profits you earn, not on your TVL, but on your profits. And so that's the only downside of it, but they do auto compound and auto balance for you. I think that with AI, we're going to see more where you won't need to put it on HawkFi necessarily, that there may be some AI agents that do that for you. We'll have to see. Jupe Sol I'll be using Jupe Sol and Sol USDC. I think Jupe Sol is a little more risky, again, because the price can be more volatile. But overall, I think it's also really, really good. What do the fees look? So the only problem with stables, I would not use stables. Haitian Buffet, thanks for commenting. The reason why is because the yield on stables is much lower, right? So look, if I do, let's say I put in some money here and I do a 4x leverage, okay? And I have to have the range pretty tight. Like let's say I do this really tight. Like this is probably not the best because it's going to go out of my range fairly often, which is fine. But like as long as it stays in here, it says I can earn 0.05%, which is like really low, right? But the problem is 0.05% on a year APY is 18%. But you're borrowing USDC and USDT. And so if you come down here, you can see that USDC currently is at 24% on the APY. So your debt will actually be higher than what you're earning. They're working on trying to figure out a way to make stables work. But as of right now, I would not use stable to stable pairing. Sol USDC is fine. And other things are fine because the yield is higher. But you don't want to do stable to stable right now on DeFi Tuna until they figure out a way to make this work. USDT also depegged and went to 1.09 recently. So that's also scary. Yeah, I mean, I guess you could sell your USDT if it goes up to 1.09. You don't want it to depeg on the way down, though. Yeah, USDT is more likely to depeg than USDC. So I keep all my stables in USDC personally. The market was looking like it was going to bounce back, and then Sol came down a little bit again, and so it kind of started to dip. The interesting thing here is if you look at like the MACD and the RSI and stuff on like the 15-minute, it looks like it might dip a little bit. But if you look at the 1 hour, it looks like it could come down a little more, but it's more likely to reverse pretty soon. I accidentally clicked off of my RSI. It does look like it's more likely to reverse upwards pretty soon. There's also looking at the supports on oops. There's like multiple supports here, all the way from 208 to 220-ish, which it bounced off this 220 already. So it could come back down to here. Actually, technically 221 is kind of the next one, and then there's one here as well. There's like a bunch. Like you can see, it was like so. It would take a lot, I think, to drop below this range here. It could, but it would take a lot to get down to this point. I mean, even looking lower, right? Like there's a pretty significant one here at 200. And then one at 185 there. So like if it dropped below 200, I might stable up some stuff. As of right now, I'll let it ride even down in this range here without like stabling my Sol. Thank you for the knowledge. I benched your lives the past couple of days. First time I caught you live. Your videos helped a lot. Appreciate you. Hey, man, glad they helped. Glad to hear it. If you fall under your bin, do you just close and take the loss and hold and wait for recovery? Yes, you could. You might want to wait for the recovery. If you can close it out before it gets out of your range, that's better because you can close it and rebalance it without taking a big loss. Like there's still the impermanent loss, but like let's say your range, the bottom of your range is 220 and it goes to 215. Well, you were buying Solana on the way down to 220. You now have a pool full of Solana that stopped buying at 220. If it now is at 215, to rebalance that pool, you're going to have to sell the Solana you just bought at, let's say, 225 down to 220. You're now having to sell it at 215, taking a loss and moving it into USDC to be able to create a new Sol USDC pool. Now, when it goes back up, even though it's going back up and it looks like you're gaining, you're not, because you're still selling it for less than what you bought it for. So let's say it's at 215 is where you rebalanced. Well, as it makes its way back up to 220, well, you bought it at 220 last. And now you're selling it at 215, 216, 217, 218. And so ideally, you would wait for it, if it dropped below your range at 215, and let it come back up to 220 or higher before rebalancing it. Or before creating a new pool. You would still close out of that pool most likely, unless you wanted to wait for it to come back into range. You could do that also, or you could create a new pool. Either way, but if it's going from like 230 all the way down, and you're buying more and more Sol, it's still in range, and it's at 221, and it hasn't hit the end of your range yet at 220, and you close out your pool, you bought it all the way down to 221. You're now going to close out your pool. You're going to sell half of it for 221 where you just bought it in at, and you're going to rebalance it. And now it's at 221. So now if it comes back up, you're selling the Solana at the same rate at which you bought it for on the way down. And so it balances out if you close it and reopen at the same point before it gets out of range, and you're earning fees the whole time. So that's the ideal scenario. Yeah, Sol Jupe is the most interesting pool. They're not correlated, but still more than USDC, obviously. Yeah, it is slightly more correlated. Like, obviously with the Jupe event going on, it's been a little more sporadic. But in general, they do move together. I really like JLP Sol or JLP USDC, because those, to me, like JLP Sol, are literally directly correlated. And so those move together, but obviously Sol is going to move more than JLP will. And so, like, if you look at the Sol JLP pool, if you have like 10 Solana to put into it and you long it at 4.25, and you think that Solana is going to go more up than down, then you could do like 55% on the way up or whatever. And then if you set this range to like, here, like out to 10% maybe on either side, you're still earning 2.6% a day. And so, like, if you go to, you can look at JLP and see the range in which it's moved over the last, 30 days, last few months, whatever you want to call it, to be able to see what the range currently is, right? And so we're going to go to a 15-minute chart here, and we're going to do it instead of USDC. We'll do it in Sol. Oh, shoot. Where is DeFi Tuna right there? This is JLP Sol. Oh, I can do it in, wait, is this in USDC? JLP. Oh no, I need it to be inversed, yeah. Cause it's showing Sol to JLP, whereas this is JLP Sol. I can do that on Bird Eye. I don't think Good Morning Good Night has this. I don't normally use Bird Eye, but it is good for this, for checking out these ranges. Because it can do the inverse. Sleepy. Yeah, I think that's a great idea, man. So you can just type in the pair here on like Bird Eye, do like JLP Sol. And you can just, instead of Sol J, or so, no, we need Sol JLP, sorry. That's how DeFi Tuna has it set up, Sol JLP. Right? Let me just double check. Yeah. So you can see the price here. Obviously, like, it's gotten pretty wild the last few months. or sorry, this month, it's gotten pretty crazy. And so like, let's look at the 2 hour. So we can like get it all the way to the beginning of January here to here. And so if you draw out some lines on this, if you really wanted to stay in range the whole time of like a pretty like drastically wide range, you would do this. You do 57.68 and as low as 42.7, which is pretty close to where we're at now. Again, you could do it a little higher than this, but if you're just like, all right, I want to go like as wide as it's been in the last month, which it's been pretty volatile in the last month, you'd go 15% up basically and or 14% up and 15% down roughly, like somewhere around here. Right? And that'll still earn you 1.85% a day. And it should stay in this range for a while, again, unless Sol breaks like 300, which it could do. But if like it looks like Sol, like let's say it pumps to 250, 260, 270, and it's like people are like going crazy, some crazy events happening, you're like, this thing could break 300, well, then you could just close out of your pool, right? But realistically, staying in this as long as possible is ideal. And so, again, if it did the same thing on the drop, right, like some crazy event happened that's going to cause Sol to dip, again, you could just watch it. And if it looks like it's going to go too far, you could close it out before it gets too close to the end of your range. But I mean, the fact that you can go this wide and still earn 1.86% at a 4.25x leverage. I mean, if you went up to 4.5, like obviously your liquidation zone is getting a little too close here to me, but you can earn even more. So I would do like 4.25 or 4, I feel like is more comfortable. Obviously, you earn a little less on the yield, but you're much safer as well. So that's a great example as well. I mean, both Sol USDC and Sol JLP are both really great for that. So you could look at both of those. And you could do this with any pair, like I did on Bird Eye here, where I like looked at the range, and you can see here it went out of range back in November. Sol JLP on the top side, but you can see the lower side. This is still pretty good range, and you can see here all the way back to June is where it stayed in here. So I mean, for the most part, like this is pretty good, and you could go tighter to like here and here, like 55 to 44 if you wanted to earn a little more. But overall, I think this is pretty good. You mentioned a couple weeks back that you didn't like the auto rebalancing on HawkFi. Would you mind explaining that? Yeah, I really would like them to have event-based. So this is the same reason that I talked about closing out your pool on Sol USDC before it gets out of range, because you end up buying in lower than what you or you end up having to sell the Solana lower than what you last bought it for. And so you end up taking a big loss just on rebalancing. And so HawkFi checks it every hour. So if it's on the edge of your range here at 193, let's say we set this pull up on HawkFi, I like that it rebalances. It's a great thing. It's really cool. It could still be better. The rebalancing that they do could still be better than letting it dump even further, right? So it could be good that they do that. I'm just saying that there is some downside to it. And so let's say it's sitting around 194-ish, 195-ish right here, right? Well, it checks every hour. So let's say it checks it and it's at 194. It won't check it again for an hour. And in an hour, it could go from 194 all the way down to like 185, right? Maybe even lower. And so the problem is that when it checks it, it could be it could be 59 minutes later before it checks it again. Or it could have not checked it in 50 minutes and then it goes out of range. So it's only out of range for 10 minutes because there's only 10 more minutes until it checks it again, right? But I would like them to either reduce that down to like checking it every like 15 minutes or 10 minutes, or have an event-based system, which they have on their UI, event-based, which I think would be big, which essentially just means if the price of your pool gets to, let's say like right here, 195, just rebalance. So it would just rebalance when it's here. That's the gist of it, though. All right, I'm going to summarize again, just kind of my plans, and then I'm going to hop off. I appreciate everybody for being on, but right now I'm watching the market. I'm kind of getting an idea. Okay, is it going to dip a little more? Is it going to go back up? But essentially, I do think it'll come back up at some point, even if it dips down a little further. And so I'll start to adjust my portfolio to the kind of new criteria that I had mentioned before. at the beginning of this video, which is that breakdown of, 50% in this, 30% in this, 15, so on and so forth. Right now, I have too much in meme coins, and I'll need to adjust this. And so I say I have too much. I have 33.6K in it right now. That's not what I meant to do. I'm just going to do 34,000. Yeah, so I have around 24, 25% right now in meme coins. But these are all down for me. So I really want them to come back up a little bit. Again, that's the ideal scenario. We'll have to watch and see. If I need to end up closing out of these and taking a loss, I can. But the goal is to have these come back up. I'm earning a little bit of fees in the meantime because I have them set up on very wide 200 bin bid-ask pools so that I sell most of it at the top end, not at the bottom down here. But I want to wait for these to bounce back up. Then I will take some of the profits from those and some of the overall TVL in these, rotate it into my mid, into my long-term goals and vision. And I'll then keep doing this on a daily basis, on and off, and then keep rotating into the higher stuff. And so as this comes up, I'll start to balance this to where hopefully by the end of this week, I'll have my portfolio balanced the way that I just explained it and how I want it. And again, I'll be creating the video on having a plan and having a good balanced portfolio. I'll create a video on that to be able to post on YouTube and on Twitter as well. And so, yeah, I appreciate it. I'll be streaming again on Wednesday of this week. My goal with streaming on Wednesday will be more talking about which specific coins we're looking at. Right now, it's kind of hard to know because, again, I'm just waiting for a good bounce back right now. And so we'll see what it looks like on Wednesday. Hopefully, we'll be talking about some new coins, talking about how I'm rotating my positions and things like that. And I'll be able to go through doing some actual token analysis on specific coins instead of just the overall plan that I talked about today. But hopefully, y'all found today helpful and educational. We ended up having over 500 people coming on and watching today. So I appreciate y'all so much for being here. I do stream every Monday and Wednesday. Sometimes I'll stream outside of that if there's like an event going on. And then I try to create videos and content and educational guides and stuff like that, both on my Twitter and in my Discord. So if you haven't already, you can join my Discord, go follow me on Twitter. I'd appreciate it. And you can also hang out in those places to ask questions and find out more information. Haitian Buffet, you should definitely make videos too. That's where the money's at. Yeah, it is. I know people like the live engagement interaction. I love doing these. I was streaming 3 times a week, and so I actually reduced it to 2 times so that I can create more videos in between to be able to try to eventually get to where I can monetize, because I'm not monetized right now. This is all free information, and I'm not. But the goal is to stay doing this and to become monetized so that my main thing that I can do is education, right? And not just on the trading, but I can continue to help people for free because I make money from the monetization. That would be the goal. There's actually a team called Vajra. I don't know if y'all have seen this, but their goal, they basically integrate in and they have the VDR token. And so the VR token's live on Solana. They relaunched it. I forget where it was, but they moved it over to Solana, like many people are. But they are live streaming. They allow you to, for your live streaming, they allow you to like put an overlay. So basically, like on the screen over that way, there would be like a video over in like the top corner over here. I can make it really small so that it doesn't bother y'all. But basically by having it, it's like advertising, and then I can start earning off of that even before I'm monetized. And they have a VDR token. So I'm going to test it out. If it's like really annoying or doesn't work, then I'm not going to sacrifice the quality of my videos for that. But if it does seem like it's going to be pretty cool and work well, then I might keep doing it to be able to start monetizing even before like X or YouTube would monetize me. So we'll have to see how it works. But again, thank y'all so much for being here. Again, I really appreciate y'all watching. Hopefully y'all continue to find it useful, and I will see y'all next time. Y'all have a great day or good night.